Rajen Shah now joins us, Chief Investment Advisor with Tradebulls. And Rajan, what are you telling your clients? Time to take some skim off the chips off the table, book some profits, or this rally or the strength which we've reported off late is here to stay?
Well, Nikunj, actually early this year in January, we were on one of your shows actually in the afternoon, and that time the Sensex was around 27,500, and we had mentioned that our Tradebulls target for the calendar year December 17 is about 32,000. So we are just about 3% away from that target of 32,000. Nikunj, the liquidity in the market is very strong, the momentum is strong, so probably we could even pierce 32,000 and even touch 33,000. But that would be running a little ahead of fundamentals, So we have advised our clients to book profits wherever they are making good money and sit on some cash. As and when the comes, it would be a great opportunity, because every year there are some opportunities, like in February 2016 we had a great opportunity, in November 2016 again, December 2016 again we had a great opportunity. So probably at this point of time the scenario is so bullish that we don't talk about correction, but who knows, in the next 3-6 months we get an opportunity, and that would be a good time to deploy the cash. So I think that the market is fairly priced, and some of the stocks are running ahead of fundamentals. Companies like Page Industries at 50 times. I was just going through some companies, for trading at 40-50 times, and many of the analysts trying to justify those kind of valuations. But Nikunj, we need to keep in mind that in 1992 we had ACC at 10,000, then same ACC came down to 2,000. In 2000 we had IT stocks like Infosys, Bellwether, blue chip companies, trading at 20,000 coming down to 2,000. So this kind of things happened. 2008 we had HCC coming down from 300 to 30 rupees. So my advice to investors would be see the valuations, see the fundamentals, and the latest is Sun Pharma. 2 years back the stock was trading at more than 1,000 rupees. Today it's trading at 50% of its peak it touched in 2015. So it was trading at 8 times, and we had advised investors not to get into it. 8 times the sales. Today it's trading at 4 times. So look at the valuations. Don't fall prey to this kind of multiples, for 40, 50, 60 multiples. The market is according to many of the growth stories. There's a lot of value still in the market. You may shift your attention over there. So that is the advice I would like to give to the investors.
Okay. Great. Rajan, just stay on with us. We need to discuss your ideas as well. But before that, let's go across. Pranay is standing by to give us the stock of the day, which is Hindustan Copper. Pranay?
Yes, metals as a space is shining, Tanveer, and Hindustan Copper is the standout gainer from this pack today. The company has started production at its Banwas mine in Rajasthan. Now, this is not a big one, but it has a sizable capacity of about 6 lakh ton. And this was an important development that was awaited. Also, it is important because it is vital in the management's overall vision, where they are looking to expand capacity fourfold to about 12.4 million ton per annum. This will be done by increasing the existing capacity at its sites, as well as at other locations across Rajasthan, Madhya Pradesh and Jharkhand for that matter. And there's another trigger over here, which is the Jhagadia copper smelter. This was acquired last year from Arcel, and this has a production capacity of about 50,000 ton of copper cathodes, which can be made at an EBITDA margin of about 15% approximately. This too is being ramped up simultaneously, and add to that the cost benefit that the company will be enjoying from the power that it is procuring from Power Trading Corporation. So strong volume growth, ramp up in the current capacity as well as mining, so it's an integrated player, savings on the cost side. All of this will augur very well for the company going forward, which is why if you look at the volumes on this counter, it's at 11 times the last 5-day average. It's the highest that we've seen in the last 3 weeks, and the stock in today's session has climbed up to a 2-week high. As I said, the top gainer from the metal pack.
Okay, right, Pranay. Thanks a lot for that. 12 points off for the Nifty. Pharma stocks are looking strong. Steel is where the real action is. Rajan, classic investors would say we don't like metal stocks. But for those who've been saying that we don't like metal stocks, they missed on a 200 to 300% appreciation in last 1 year.
Yes, Nikunj, you are right actually, but now buying the stocks after this kind of appreciation also is a risky proposition. Yes, the Indian operations of Tisco, JSW would be doing very well, but what about the global operations? So I think, I would be, Nikunj, we are in a 7, I didn't sound bearish at the beginning of the show. What I was saying is that the markets have run up ahead of maybe a little bit of fundamentals if they cross 32,000. That is what we are saying. And we are very clear in our view on the markets that we have a 7-year bull market right in front of us. And there's going to be a mild speed breaker in May 2019. So it's a bull market, no doubt. But then in bull market also there are certain segments which are overpriced. Some are grossly overpriced. So, you can ride those momentum in those, but you got to be extremely alert on getting out of those counters as and when the tide turns, So I would actually not advise investors to get into that. Now, coming to metals and all that, they were, yes, undervalued about a year or so back, and they have done very well. But I think at this point of time, instead of looking at metals, there are plenty of other opportunities. Some of the ideas have not moved up, I mean, I can name 10 ideas which actually have not participated in this rally over the last 6-7 months, since December. So why not get into that ideas which are fundamentally good? They have not participated in the rally. A lot of value on the balance sheet. Get into those ideas. They are the risk reward is very clearly in favor of reward. The risk is maybe 10%. The reward could be as high as 100%. So get into those kind of ideas rather than buying something which is already appreciated 100, 200, 300%. Get into this kind of ideas. There's an element of safety in those ideas. So I would clearly avoid metals at this point of time and get into those ideas which I said.
Okay, you like Mahindra Holidays. I was looking at Mahindra Holidays. It has gone up from 220 rupees to 540. So it is doubled. It is trading at a P multiple, and P multiple is not the best way of looking at Mahindra Holidays. Even if I look at cash flow and other parameters, valuations are at a historic high.
Yeah, let me explain, Nikunj. See, Mahindra Holidays came out with an IPO in June 2009, June 2009 or June 2010, so about 7 years back. Now, when it came out with an IPO, the price was 300 rupees. It came out with the IPO at a price of 300 rupees. Today, it's quoting at about 540 or so. So actually, it's moved up 80% in 7 years. So it's not an expensive stock. It's given just 9 or 10% return year on year for the last 7 years. So it's not an expensive stock at all. Now let us see what was the position in June 2010 when it came out with the IPO and what is the position now. In June 2010, when it came out with the IPO, they had 30 resorts. Today they have globally 80 resorts. They own 45 in India, and I think they bought this property Holiday Club in Finland, which has got about 35 resorts. So they have about 80 resorts. So number of resorts up by 2.5 times. Then the number of rooms, if you see, they had 1600 rooms in 2010 June. Today they have got more than 4000 rooms, and if you add Holiday Club, it is more than 5000 rooms. Number of members, they had 1 lakh members then. Today they have got more than 2.67 lakh members, 2 lakh 18,000 members in India and 50,000 of Holiday Club. So everything has gone up by 2.5 times. So even the stock price, if it goes by 2.5 times, it should be at 750. It's quoting at about 540. The other interesting thing, so based on this, obviously it's undervalued. The other interesting thing, Nikunj, I would like to mention over here is that, in India we sell 25 lakh cars, and this company is selling just 18,000 membership. So I'm expecting the number of membership acquisition to go up aggressively. We saw that in the last quarter when the members acquired by the sales team of Club Mahindra was 26% year on year. It saw a growth of 26% year on year. Now, if you quadruple that number of 6,200 members which they acquired in the last quarter, we will be touching 25,000 members. Now, that's very good figure actually, 25,000 members, because last year they touched 18,200 members. The other and the most important thing when you compare it with the hotel companies, Indian hotels, the EPS is not even 1 rupee, the stock is at 135. East India Hotel, the EPS is not even 2 rupees, the stock is at 135. And here is a company which is going to report about 22 rupees earnings and trading at 540. Now, this company has a much higher, I would say it is much better placed than hotel companies because they have 2,18,000 members and their occupancy is assured. They enjoy 85-90% occupancy. Indian hotels, East India Hotel, the occupancy is about 65% or so. And they don't need to worry about, the restructuring and the renovation cost, because this 2,18,000 members pay them 350 crores annually as annual subscription fee, So this is an interesting idea which the market has ignored. I think this company deserves a P like Asian Paints and Pidilite, it deserves about 35-40 P, not 20 P, because there's an assured source of income, So I think even at 540, it's looking very interesting. We have a target of 850 and I personally own the stock.
Lovely analysis on that, Rajan. But I'm just going to take a quick detour. Let's go to Pankaj. He's standing by with what he's picking up from his dealer friends.
Right, Nikunj, what I can pick up from my dealing sources is that Future Retail is a stock which continues to do well. So it's been up around 20% in the last 3 or 4 days. It's up another 3% today. Fund buying continues. Morgan Stanley continue to maintain its overweight, and that's the reason why the stock is doing well. So Future Retail continues to be one of the buzzing names. Sun Pharma, what we can pick up is that UK-based big FII funds have started to accumulate the stock. Around 520, 530 is where they have started to accumulate the stock. Don't forget, it's one of the top 5 gainers in the Nifty 50 pack today. And the entire steel pack, which we have been focusing in on, what most of the dealers say that after CLSA upgrade, it's not only FIIs, DIIs which have been active, but even trader and the HNI community has started to buy this name on the long side. So both JSW Steel as well as Tata Steel is seeing some good amount of volume action led by HNI and trading desk.
Okay, Ajay?
Well, Nikunj, DRL, after we broke the story, did not really saw any profit taking. When we worked our phones, we inquired to know that one of the large domestic funds is acquiring that name or buying from the open market today on expectation that Srikakulam announcement is happening officially. So dealers are reporting positive flows from domestic guys. Not only that, United Breweries and even USL, that is, there are 2 names which big HNIs are heard to be accumulating. Both are doing pretty okay in today's counter. Watch out for that name. The top big HNIs say that most of the negative news is now getting factored in. Last one is JSPL, one big FII who had missed out the metal rally is starting to go overweight on metal stocks, and they are starting today. The buying was heard in this particular counter, JSPL, and the counter has come down from its recent high. So this is also one counter to watch out for from the dealing desks.
Okay, Pankaj and Ajay, thanks very much for taking us through what dealers are talking about in the dying minutes of trade. Let's quickly get in closing strategies as well. Dr. Narayan, I'll start off with you. What is it that you'd recommend?
Well, at this stage, I would look at shorting into a GAIL. I think that's a chart which is undergoing some bit of damage. Currently at about 390 levels, I would short this with a 7 rupees stop loss, looking for a price level of about 380 by tomorrow.
Kunal, what about your closing strategies?
Nikunj, it would be a buy on Ashok Leyland. The stock is getting towards a decent monthly and weekly sort of breakout. 96.5, 97 was the previous resistance, where the stock took a substantial sort of retracement from those levels. Now with with volumes in favor, with the stock moving above the long-term averages, short-term trend intact, I believe this time around it should try and challenge and break its previous swing high. So a buy on Ashok Leyland is what I'm recommending at current levels with a target of 105, stop loss to be kept at 89.
Okay, Siddharth, your strategy?
Well, Rajen Shah may not be liking Page Industry, but Page Industry is doing really well, at least from a momentum perspective. So when momentum is strong, valuation can take a backseat. And this stock is seeing decent volume. Look at the volume chart if you can show it. It's again a breakout above this 15,500, 15,600 odd levels. I think stock can easily move towards 17,000 levels. That is where probably this momentum might fizzle out. So go long over here or stay long if you're already long.
Rajen Shah, is it true that you don't like Page Industries? And if you don't like Page Industries, give me one reason apart from valuations. I mean, I've seen a stock like Grove Finance, it's expensive and it will always remain expensive because it is growing. And I get a similar feeling for Page Industries.
Well, the only reason let me clarify what Siddharth said. I didn't say I don't like Page Industries. I said I don't like the valuations of Page Industries. So valuations are expensive. It's at 50 times, and I don't have, very frankly, the courage to buy a stock at 50 times and make money. I am not in the hurry to make money. I have plenty of better ideas. So I would rather put money in those. Page, yes, the product is good, but we also need to keep in mind that Aditya Birla Fashion Retail is going to be yeah. Hello.
Yeah, we can hear you. So, well, valuations, to be fair, they are not exactly very, mouth screaming. You have to buy something when you're investing. Gold at the price of silver. Page Industries is maybe gold available at the price of gold. Let's go to Manas for his closing ideas as well. Manas?
That would be JSW Energy, because stock broke the neckline of inverse financial pattern on the daily chart with decent volume. So I am expecting further up move. 69 is the target, stop loss is 63 rupees.
Right.
Okay. JSW Energy, so it's the steel space, it's the metal space, there is a huge sectoral rotation which currently is on, and CK, at a time when we are extensively focusing on sectoral rotation, one day it is steel, the very next day is power, you never know, tomorrow it could be transmission, followed by, tires once again. How does one know where the next, puck is going to move? CK?
Yeah, that was for me. Okay.
That's right.
Well, that is always a function of what is the scans that you run. I mean, I'm presuming that you're asking from a very dynamic point of view, and this is where we keep doing through the day, running different types of scans to spot where the activity is actually setting off. So you can find out a stray pharma sector where the rally is beginning. Today something sets off in metals and something has set off recently in airlines. So this is a market undergoing very swift rotation, and unless you are really clued on with some fairly decent help from software, it becomes very difficult to spot it by merely trying to eyeball it or trying to follow the news. I think some bit of let's say technology help will certainly be make your job a lot easier. I think that is what most of us from the technical side are currently using to spot where the changes are happening in slight anticipation.
Okay, gentlemen, let's start wrapping up the market. It's been an interesting trading session stock-wise again. It's become a very stock-specific market where the index is biding its time in 9600, short of the 9700 mark after having a touch-and-go moment with the index yesterday. I don't know what that was day before yesterday, but Page Industries gaining 800 rupees in one single trading session. One can argue on valuations, as I was telling Nikunj, that even if somebody would have bought the stock at 11,000 or 12,000 from that mark as well, they are in the money. Okay, the market for its bit, 96.43 is where we are settling in trade this afternoon. The mid caps and the small cap indices have closed higher. You have the entire pharma basket being the gainer in the session. So Dr. Reddy's, Sun Pharma, Cipla holding out, Aurobindo Pharma giving it comfort, HDFC moving higher about 2%, Tata Steel, Tata Motors doing well. No exaggerated moves, mind you, on the markets, at least on the gainer side. On the losing side as well, TCS is down 3.5%. GAIL, IOC, BPCL, so the oil and gas story looks a bit weak. Largely, I think IT banks, they are the ones which are dragging down the index, but it's just so finely split down the middle. It's an absolutely even balance.
Yeah, you can't find fault with the market action. Trust me, optically it may not be a close in the green, but we are so habituated with the market which closes in the green that every time it's red we think that something's going wrong. No, I mean 15 points here or there on the Nifty, a little bit of market breadth, a little bit of shakeout there. It's not going to change anything in the short term or anything in the medium term. Things have been slightly subdued yesterday and today, but for me that is not a trend changing pattern, so to speak. The basic contours of this leg of the rally, which is global liquidity, global strength, those two factors are still intact. If at all the crack in crude is going to be helping our macros, the good thing for us is that the sell-off in crude has not translated into a risk-off moment for global markets. We've seen historically that crude prices and emerging market equities, they've moved together. That's how risk has moved. So some of those historical correlations I guess are getting corrected. There is weakness in the dollar index. There is no large ramp up in all commodities across the board, and even if there is selling in crude, that has not translated into any large impact on emerging market per se, because emerging market is the first one because they're very sensitive to flows and they're very sensitive to what happens in the commodity market. So let me start getting closing comments from our experts, and I'm starting with you, CK. 2 days of subdued action. Is this an indication that markets are now trying to settle in a down?
जो आज थोड़ी असमंजस बनी हुई थी,
Oh, most certainly not.
उसको ब्रोकिंग हाउसेस तो कह रहे हैं कि ठीक है आप बाय करें.
Downward range, you would start seeing price
उसको दूर करिए आज.
Price damages in some of the leading stocks, then that we are definitely not seeing. Instead, what we are is a fresh set of stocks moving up into possibly newer highs, either swing highs or all-time new highs. Sector rotation relentlessly, and there is hardly any kind of whatever has been recently added. This is definitely not a signal of a market which wants to roll over and, break into some sort of a downtrend. That said, we can say that over the last 3 sessions, the market has been, describing a range with 9700 as a kind of a high price. Now, a round figure acting as a kind of resistance is nothing unusual. In a rising market, people like to think in terms of round figures and they take profits or they initiate positions whenever we move up from or up into a round figure. So I think possibly something like that is happening. Sector-wise, I think IT is holding out, banks are holding out, the other sectors are all pitching in, pharma is rallying. So I don't think there's any misgivings from any of the sectors as well. The small cap, mid cap area is also holding out. So there is a reason to feel squeamish, except our own fear of heights. I think that is what all of us are suffering from to various degrees at various points of time, and that is what is keeping a lot of people from participating aggressively or participating too tentatively in this market. As long as that remains the scenario, I don't see this market giving up. We all have to turn gung-ho bullish, or some event has to happen which will force us to surrender positions. Until either of those two things happen, this market is just going to continue in this same way.
Okay. Thanks, Dr. Ran, for that perspective. Siddharth, come to you. What is it that you are hoping to see in the near term?
Well, the way market is moving, Tanveer, I don't know. I mean, to say we might, do this labored up move, might, continue. We are seeing a lot of action happening in 9,600 put option. So that makes a level to watch out for as a support level, and below that probably then we should start discussing whether the correction is setting in or not. Before that, I think it's not it won't be prudent. Having said that, that's just 47-50 points away from current levels. Look at last 2-3 months, we are talking bull market. It is a bull market, no doubt, but it's a very labored move. In last 3 months, you've got a 3% return. People would say it's not a bad, because that translates into 12%, but then that's not how index moves. There should be some volatility. Yesterday, volatility was at all-time low, 9.99, implied volatility. That's not a market which gives you a very big upside move immediately. I'm not trying to sound negative, but don't expect very big positive moves also.
Right. Kunal, your thoughts?
Tanveer, I think very similar to what CK has said, the internals of the markets are so strong that you have one or the other sector which keeps on, sort of supporting the moves, and the index, sort of climbs or, nudges higher on a steady basis. And, of course, I think it's been a labored sort of an uptrend. I agree there as well. And, right now the action is more towards stock specific and, rather than sector specific as well as, index specific. So I think, till the time we don't see any significant sort of cracks on the index, I think it's a futile exercise to really call off any sort of trends. The internal structure is still intact on the sectors, so I think that should probably be an indicator, of the short-term trends. And since that is intact, I think the view is bullish on the index as well as on a lot of stocks and sectors.
Okay, and Manas, your thoughts?
Though Nifty is stuck in a narrow range, but one thing is very clear, that Nifty has a lot of support in the range of 9600 and 9630. Until Nifty is trading above 9600, I think any correction is a good buying opportunity. I am still hopeful for upside. I think Nifty has potential to break 9700, and if it breaks 9700, then the next target would be around 9845. So tomorrow, if Nifty sustains above 9660, then I would be buyer on Nifty with a stop loss of 9600. Sector and stock specific auto look good. I think Ashok Leyland, TVS Motors and Maruti can give a move tomorrow. And one should be very much cautious on PSU banking. Syndicate Bank, Oriental Bank and Allahabad Bank are looking weak on charts.
Okay. Thanks very much, all of you, for joining in. Rajan, before we let you go, just a quick call on Tata Power, if you can explain your rationale for liking the stock.
Well, Tanveer, there is always this temptation of investing in a company which is in strong momentum and a lot of market fancy, like the temptation to invest in Reliance Communication when it was at those fancy valuations in 2007-8. And but at that point of time, if you had resisted your temptation and got into Hindustan Lever or ITC, you would have made a fortune actually. But that time Hindustan Lever and ITC were laggards. Today the same thing is with Tata Power. It's a laggard actually. You know,
मेंटेन करें हिंदुस्तान जिंक मेटल स्पेस से
stocks, but Tata Power is a laggard. But if you see Tata Power, this year they reported about, last year they reported about 1400 crore of profit. Cross holdings, I think that should be over in the next 12 months. They have investments of 10,000 crore, both quoted and unquoted. So I think that also would be unlocked. That will go towards debt reduction. So you can expect market cap to go about 10,000 crore, which is about 40% of the market cap. And the most important thing is that in the next 2.5 years, Mundra will turn around. So I think if your time frame is 2 years or 2.5 years, and if you buy Tata Power, you can end up actually making 100% in a company which is absolutely safe at this point of time, you know. So my bet would be Tata Power with a 100% upside in about 2.5 years.
Okay. Thanks very much, Rajan, for joining us and giving us that perspective. That's how we wrap up the action from the markets today. When we come back after a short break, get you some post-market analysis.